Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back. Another week of trading, another week of my updates on my sample portfolio. Well, looking back, just another dull week, but for some it has been quite a fascinating week because the market recovered, especially on Monday. It was down quite a lot in the future market and the US Dow Jones, and then it recovered up like 153 points. It was quite recovering. Tuesday was continuing. I mean, the downturn basically continued from Friday. I mean, some chit chat and rumors and stuff on New York Stock Exchange and things, and Donald Trump's and China, we're all playing a part. Then, of course, they were meeting the Chinese and the U.S. Authority was meeting up last week and so forth, and then also the hoo-has afterwards as well. But somehow the strength is in the market, and basically the US stock basically just continued to move up. So I just wonder who was actually pushing up. But it was quite a remarkable move on Monday, up 53 points. But then on Wednesday, it sort of tanked, and Thursday recovered a bit, and Friday again tanked. I mean, overall, it's like, I mean, one step forward, two step back. And this is basically what I've said before. June's got to be a volatile week as far as I'm concerned. Meaning my previous assumption basically is from trend following point of view, I see the rate or the rate of change of the market recovery recently from the past 6 to 8 weeks has sort of slowing quite a bit. But Nasdaq seems to continue moving up, but everything else seems to just going a bit of sideways. And of course, we have, I mentioned before, U.S. is trying to sell, I think, $3 trillion worth of bonds and stuff. And from past market experience, whenever the U.S. want to sell loads of IOUs to the stock market, to people, the bond market in general, it just try to scare people with something. Something always happened. I don't know if it's manipulated or not. And based on our assumption to say history repeat itself, and I'm not really trustworthy with trusting the market in June, and also people start to coming out from the woodwork, so to speak. Lease down, lockdown slowly easing, people coming back out from the various countries, and you have the demonstration, George Floyd, and stuff around the world, and and the mix is basically, I just worry about coronavirus raises ugly head, people getting to know the economy recovery is not as as what the stock market is saying. The stock market basically suddenly get more notice of the type of recovery people may be seeing in the real world, and also. The big IOU bond sales in the market, and also people start to coming to July now. It's gonna be reporting season coming out soon about the second half of 2020, and how things might be not as rosy, or the depth of recovery not as great as some people might hope for. And so all this gone into a mix, but mainly to me basically is the bond market that I'm expecting a big sell off. And then obviously you have the Hong Kong security law being passed by China, or going to be passed, and debate around it, and the U.S. have a secret meeting and stuff. It just all feel the mix is like quite funny in a way that the market slowing down, and also other things all coming into play from different areas, and the stock market is slowly but surely is a bit like tanking. But it didn't tank as much as I was expecting. I was expecting quite a lot of movement, but maybe the U.S. Fed come in is playing, helping it out, and things might be moving out slowly. But for overall, the coronavirus in the world is definitely scary. I mean, American coronavirus cases, I mean, yes, they're more detection, but also people are not really wearing masks, and there's just a lot more people coming out from lockdown and stuff. So the increase of the virus being detected, and number of people going to hospital. Some states have gone down, like New York State, other state, Florida and stuff, and California saw gone up. So a bit worrying. Latin America, Brazil in particular, is getting worrying as well. So we just have to wait and see what will basically happen. And the other news is Apple is basically saying I'm not going to use Intel chip for these MacBooks and stuff, and just going to use ARM-based chip. So that's sort of push up the Apple price a bit as well, which helps on Monday of the Dow Jones recovery. But overall, I just feel that there's a lot of what good news mixed with bad news, and I personally myself just feel the bad news not being accounted for yet. So there's a lot more rooms for maneuver. I'm sure the market's going to show its hands, and trend following just going to follow the stock market and then basically follow it through. But overall, for me anyway, it's more like a quite a quiet week. I was expecting some downturn, but I was expecting a lot more. But probably because it's near the end of June anyway, I was expecting June a big move, but only seems to happen downwards at the end of the month. But trend following, we don't know when the move is going to happen. We just follow what I expect or what I have. My biases, nothing to do with actually what's happening in the market. And I'm basically mathematical based, rule based, and I just wait and see what the market gives me. But I was expecting a bit more, but obviously the market didn't want to give. But I think the whole thing, let's see how things goes. Also, with this month, basically a couple of weeks ago, I started reviewing my trade in the last 6 months, and I just want to share some of the the little findings. Basically, I was just looking at the overall March to June now, more or less, and we sort of talked a bit about last time of how the market gone down, tanked when the coronavirus hit Europe and US, and the stock market gone down quite badly in March, February, March time, and then this basically last 3 months basically is one word: recovery. The recovery is quite surprising. The Fed and equivalents around the world has been pumping money into the market and helping companies from each of the individual countries to keep people on the payroll and so forth, and a lot of stimulus coming out and helping. So there's quite a bit of activities going on, but the details, the devil's in the details, but we haven't seen much of the how to roll out things yet. But the stock market definitely recovered, and a lot of people, I'm not sure if you actually tracking the market or not. Personally, I think the down market was great, and we was just making money for trend following anyway very quickly, and up market is also great as well. For the last 3 months, if you're including February, last 4 months or so, from February to June, if you missed this big trade, I don't know what might happen to your portfolio. Probably not make much money. The downward trend was scary. It was really quick and fast and furious. Thousands of points coming down very, very quickly. And if you're not used to trading volatile market and have tools and skills to actually take advantage of the down market, you probably get burned quite badly. But that's being said, if you're only a bull market person, if you still have bullets left, money left in that sense, and you came back in end of March, early April, and just like what I reflect in my sample portfolio past couple of weeks, it recovered quite well, but it took a bit longer, rather than 3 weeks or so from the March from around early Feb to end of March, for the 3 to 4 weeks for the market to tank, like from Dow Jones almost 10,000 points, and now we more or less back up, only lost 10% or 5% or so. So which has happened the last 6 weeks or so. So the amount of time it took is double of the time the Dow Jones take to plunge. And but the recovery is quite remarkable given the actual real economy is still tanked. Lots of people are unemployed, but markets always forward thinking and recover surprisingly well. And so if you have catch that upward trend, your losses, if you have suffered during the March downturn, you have recovered quite a bit. And significantly, it has been talked about quite a lot in the media. The technology share seems to have recovered mostly. For example, like PayPal and eBay, Square, Snap, those kind of things gone up clearly a lot. Nasdaq as well has gone up back a lot as well. So if you've been tracking those, you probably have got your money back. And this basically is really a trading market for the last 3 months or so. A lot of shares and forex and indices gone down the pans, and there's quite a bit of then ups and downs going on as well. And then if you have actually caught some of that, then you definitely make some money this year. But what's surprising though is that the technology related shares have gone back up. The indices around the world seems to recover quite well, except in Europe. Hong Kong is not doing that particularly well, but Nikkei in Japan did the recovery really, really well. Just very much reflecting what Nasdaq is doing. And lately, also the forex. The other surprising things happening was the Aussie dollar against US dollar. It tanked basically the large movement downwards and then moved back upwards as well during the March, and then coming back up. Last couple of months have been remarkable. Now I think, I mean, because US dollars is basically, I personally feel is tanking, but it seems to still have its strength. And the US dollar against, the Australian dollar against US dollar is gone sideways a bit. But it was one of the quite a good, major winning area if you're actually doing trend following with on forex in this particular pair is really, really well. What the other things though is of course these last 3 months is the crude oil. I talked about it, I moaned about it on my couple of my podcasts. It's like this how manipulated it was. I mean, we've seen geopolitics come into play, Saudi Arabia and Russia having a spat, and indirectly is hurting America. And then, for some reason, the CME changes rule, and then allowed the WTI to trade in a negative way, basically below zero, and it gone down to like minus 37. And basically, some people were talking in March, April time, the WTI might gone down to minus 100 or something, but then you see the market recovered and it's gone back up to like 40 marks now. So it basically, as far as I'm concerned, is this quarter, instead of just a rapid U-turn of the shares and indices and stuff, the other thing is how manipulated people can be, even though WTI, CME is supposed to be, the regulator, the one who's the market maker selling the oil, and it can just change its basically rules and how the game is played quite quietly, slowly, and then let some people manipulate in the market and make loads of money of it. At the end of the day, a lot of retail investors got killed through ETF who were buying oil, saying oil has gone down so much, like below $10 or something. How low can it get? And it actually went down to below 37 US dollars per barrel. And then all these scares about there's not enough capacity to store all this stuff. Well, all this seems to have gone away after March, April time. And then nobody's talking about it. I'm sure a lot of companies still pumping, probably much reduced. But, the world economy is slowly recovering, but, not enough to take all this output yet, I think. There's a lot of, cuts from Saudi Arabia, Russia, and around the world, that kind of thing. But and so is America. But I clearly feel that the market is, there's definitely some space still available to store things. The strongest one survived, the weakest one got killed, and in the process, it's also been helped by the market manipulation, as far as I'm concerned, because the CME changed the game. Basically, I mean, I've talked about it before. I mean, to change any software to allow certain things that to be done, you need to plan it. The software might be flexible enough to allow it to go negative, but at least you need to test it and roll things out, do changes, and then and suddenly when they announce it, it's more like internally announcing to this market maker and allow people to the market maker to make the price to negative, and a lot of big boys somehow got wind about it, and then caused quite a bit, downward trend moving down. I'm sure a lot of people make loads of money. I mean, the media keep on saying loads of people lost loads of money, okay, on this the WTI when they go down to minus 37. But people not to think who is on the other side of the trade. This is a contract, right? So somebody must have making some money. Oh, it's very quiet on the market, and nobody say much about who have make all this money. On the other hand, they actually says a lot about retail investors through ETF tanked, lost loads of money. Some of it also in nature as well. it's quite in a way eye opener that right in the middle of a pandemic, right in the middle of a stock market shock, when there is opportunity to make money, the big bears just got a helping hand from by the regulator and pushed the market down in the WTI, and now we all just see it recover. I mean, the world in general hasn't really recovered, isn't it? Economy wise, people start coming out. Yeah, you start using some oil, but all this, there was oversupply, the loss of storage, being used up to store those oil. It would take some time to actually start using those oil, shifting those oil around. And then suddenly, over a couple of months, the market seems to forget about all the WTI issue. And then the oil has gone back up to like $40 and come back down to like 35, 38 area. And nobody talking about storage issue. I mean, all these tankers, I was going out by Florida, those kind of thing, by the Gulf area in US, all these were packing outside by the refinery areas. Why the media didn't go, take another look at it, see if it's still there, kind of stuff. It just feel to me just all this is wrong, is manipulating, and I suppose people is more concentrating now, the media wise, about coronavirus, about Donald Trump getting re-elected, those kind of things, or trying to get re-elected, and how unfortunately how George Floyd got killed, and the Black Lives Matter movement, kind of things. But it's sort of all down to overall all this stuff is like, we see clearly the market is very volatile. It can get hit by black swan event. I mean, coronavirus, initially, a lot of Western countries just think it's more like Asian problems, Chinese problem, whatever. And it spread around the world. So it show how weak the medical, establishment are in the Western world. I mean, in the East, people always think the Western countries is believed to have better medical equipments, medical staff, medical strategy, and to cope with big pandemic and issues, virus problems. But it all turned out to be unfortunately, I have to use the word a joke, and basically it's not really prepared. They probably may be prepared for terrorist attack, dirty bombs kind of thing, chemical warfare kind of stuff, but not prepared for actual virus. Man-made or not, I don't know, but let's assume it's just natural occurring. They just couldn't handle it. So to basically blame China or blame Asia in general from the West, and then gang up on China kind of thing by the West, it's like I think the West also have to take most of the blame themselves by being slow, picking things up, and slow protecting themselves, slower quarantining. And do they have to follow the Chinese model? That's another question. You don't have to lock down, do they? Is there some other way you can do that? That's well question of. And also like Donald Trump keep on saying, it's only a small number of people get infected, it all got magically gone away. It didn't gone away, it's still here, and it's basically around here in UK as well, and it's affecting most people around the world. About 9 million cases now around the world being detected, and 200,000 people died already, or something around the world. Or probably a lot more than that. I'm not quite sure the exact figure. And it's looks like coronavirus. He's to stay for another 3 months, maybe 6 months, another year or so. I don't know. But how does that going to affect the general market? I don't know. But just looking at the recovery for the last 3 months has been amazing, and also market manipulations actually coming out. That's surprising is with all this tanking, gold hasn't moved off much either. I would have thought it would have. At the early start of the year, it moved from 1,500 to around 1,700 because America sent a couple of rockets to Iran, Iraq, and Iraq basically, and just killed some people, some general and stuff, and also in Iran retaliate and so forth. But I would have thought the pandemic would have caused lots of people gone into the gold as well as safe haven, but it didn't move up that much. At this point in time last week or so, we've gone up to like just outside 1,800, and it come back down now to about 1,750. But I was expect that to go through the roof, that kind of thing, but it didn't during the last 3 months. It moved up, yes, definitely, but the amount of movement is quite slow and low as well, given that the Dow Jones went down 10,000 points, 30%, 34, 35%, and what the gold moved up from 1,500 to 1,800 or so, 300 pounds, $3 or $30 and some, or $300 and so. It's not a lot in general, so it's quite a bit surprising on that front. But overall, this V-shaped recovery now, for me anyway, for this coming, this July coming out now, with reporting season coming through. Basically, you want to see, how this all things going to plan out. But as for my just initial review or looking back, basically the last 3 months has been profitable for me. But it's also sign of one thing: if I miss one trade, if I really missed it, I would have missed this whole movement. But that's also standard to say something else as well. If the market is moving and you have missed your signal by a couple of days, maybe a week, the market is still moving in the favor. Just get in first, get in with a small little bit, and go in and trade, and in the direction of the market, of your signal saying, let's say, go buy during the recovery, buy, and rather than second guess and say I'm too late, too slow now, kind of thing. If your system giving your signal about a week ago and then you missed it because whatever happening, life happens, things happen, and you missed it, doesn't mean that you cannot participate. You probably missed the best buying in opportunities, but a true recovery, I also see, talk about 8 weeks or so for this V-shaped recovery for the last 3 months. And if you have only missed a week, was about 3-4 days a week, it doesn't really matter. And you can still benefit from a lot of it. Just like what I said, like going to bath, you try a little bit first, put a bit of money into the market, see if let's say Apple, for example, did actually gone up, is recovering good, put a bit more, rather than one big lump sum, and you have able to take part in the recovery and probably, save yourself some money. So whatever you lost during the March downturn, you probably recover a bit. But that's providing another thing about trading as well, is you must have money left on the side. You must have money to come in to actually, to make the trade. So if you got tanked, you got, all in more or less during in February, and suddenly got tanked because the market gone down a lot and got killed, and you had no money to come out to actually take on the recovery, to help you recover some of the losses. It's quite painful, but that's also a part of the trading as well. It shows you that you don't put a basket in everything, or in just Apple, and then suddenly got tanked and got killed and got no money to participate in the market. You always have to manage your risk. The risk is there, and also for me anyway, the market go up and down, both bull market as well bear market. It's trending either way. You can make money eat both ways, and that's the big call out as well during the last 3 months. And the recovery, of course, seems to take double the time how much it takes 3 weeks or the Dow Jones to punch 10,000 points or so, and so that's also telltale sign. And the other thing which I just talk about is market manipulation. Doesn't matter when the market, when it is. Manipulation is always there. It's just basically if you get caught or not. All this regulator. Why nobody's in U.S. looking at the CME and say, look, you suddenly changed the game without general notice to, sending things out to everybody so people know you can go, trading WTI can go negative as well. Nobody, no regulator in U.S. government is actually looking into it. Why the Fed's not looking into it? Why the government not looking into it? And it's all these questions about trade, and nobody's talked much about those kind of things. So it's all quite stand out. And this is just a general taste of the type of things I sort of look through. In general, when I have I review all my trades and look at the shape of those recoveries and how much I can actually did make or did not make. What mistakes have I missed? Because a lot of times I'm suffering just like anybody else as well. Initially, when the downturn happens, my trading system and signals all saying going up, and suddenly there's big downturn. The big downturn was huge. It was thousands of points at a time, and also some of the recovery, little bear dead cat bounce was huge as well. But my system, wasn't giving a signal. I just continue to suffer. But instead of just buy long only, I also change over and then short the market and recover some more. And then the other thing obviously is, when the recovery happened, I've got money on the side to actually take that recovery and make money that way. So initially, the downturn in the first quarter, I was a bit hurt. But then the recovery for the last 3 months, recover everything and give me a lot more money as well. So it was quite good. So when the market gone down, I make some money, and when the market's gone back up, we can also make money as well. So basically, it shows a power trend following, and I'm still waiting. Some of my trend signals, obviously, like I say last couple of weeks, in my sample update, it's been changing sign and start selling that sort of stuff. But some are still going up. Like for example, I mean, PayPal, it's still continue going up. eBay is still going up, still going up strong. Those kind of things, it happens, and basically it shows that stick with your system is important, but to remember, market can turn upside down very quickly in a matter of days and weeks, and then your whole trading world might be upside down, and you really need to follow your system. And your system has to be flexible enough to turn when the market turns, and you have to be flexible enough to take the market signal to basically change side as well. Don't marry your position. Basically, when the market is gone to a different direction, your system, whatever your plan, whatever your rules are, have also followed that trend change, and then your system say go the other opposite direction, like get out of market. You have to follow. Don't marry your position. Otherwise, like the bear jump out the window, it can go down really, really quickly, quite significantly. And all you do is hold. If you're holding on, buy and hold, it really hurts. So this kind of all this stuff about. Unfortunately for pension funds, they have to hold in the market. They can just shift around, but then they still in the market. It hurt them a lot. And then they somehow, some of them actually gone into crude oil through ETF, and it got killed as well. It's fine and fair, but if they have got no money left, how can they recover and join the recovery the last 8 weeks or so, 6 to 8 weeks, and take advantage of the big market recovery shape, and then make some of their losses back. So all this is quite interesting and are good lessons to learn for last 3 months. And looking forward, I have no idea what's going to happen next 3 months. And as far as I'm concerned, reporting season comes in, people coming out from lockdown, and people will start, getting recalled back to the company to do work. But will they like full employment? I doubt it. And even if shops are open, will people be confident enough to go to shops? Americans being very brave, but what about the rest of the world and other trading partners? Some of them are still suffering big time. How the economy is going to happen, and also we got issues now. With food being wasted. Lucas is happening in the Middle East, and it's gone to India as well. I last heard, and it's quite bad. It's affecting quite a bit of area during the downturn. I don't know what's going to happen next 3 months or 6 months. It could be very volatile, but looking forward, that is type of things for, I don't know, people with fortune telling. I'm just basically looking at the fundamentals, but the market will actually hear all these fundamentals, which is to me is gray rhinos just standing there, pointing and staring at the market, staring at the stock market, and general consensus is, as if the stock market, everybody seems to be ignoring those. Now I think reality might be coming out, and basically we'll just have to see what happened in July when the reporting season starts, and if actually whatever people expect, was it as bad or was it not as bad, and those kind of things. And of course the blame games of where the virus come from, China versus US, that kind of thing, and then US try to gang of other people to get money squeeze money out of China, and Huawei's issues and all sorts of stuff, and Canada and Australia sort of got in the middle, that kind of thing, in the middle of the fight as well. So it's going to be quite difficult for next year, the next 6 months, and three months anyway, to basically see how things are. So that's just my little review. I will do a lot more details of a review on different sectors, probably later on next week with a separate podcast on its own. So anyway, that's my 2 cents worth for a little bit of a taste of my review. Next will be my update of my portfolio. Okay, so first off the bat is Apple, obviously, as usual, and the short term it changed to buy from sell last week, simply because the update from last Monday, basically they're saying, Cokes are saying they're going to use ARM chips than the MacBooks done in using the Intel chip. So that seems to, and among other things, that seems to give a good signal to the market, and the market like it, and it just moved up. So that is the basically changes. Medium to long term for Apple is still a buy. Amazon's continue from last week. Medium, short term, and long terms are all a buy. Australian dollar against US dollar is still a buy, short term, medium term, long term is a buy, but it looks like it's hovering. Now, this is something that I'm not quite sure how it played out. We've already done a lot of recovery lately, and I think if the US dollar is going to weaken some more, I think the Australian dollar is going to increase as well. But how does that go to do with the economy and recovery with the coronavirus spat between Australia and China, and also last year, more or less, nobody talk about it at the moment. It's still loads of places got burned out. The large fire last year, and then how that recovery could take place could take some time. So basically, for me, I just got to watch Australian dollar against US dollar. This pair could be quite useful to look at. Next is Brent crude oil. Short term is a buy, medium term is a buy, long term is neutral. So overall, it's recovering, it's still continuing. Crude oil, short term is a buy, medium long term is neutral now as well. So similar to last week, basically. DAX, short term is a sell, same as last couple of weeks. Medium term still a buy. Long term now has changed to neutral now as well. So basically, the last week or so, or basically have slowed down quite a bit. Short term is a sell, and long term is also gone neutral. Medium term using the S2 Turtle System 2 still buy at the moment. 55 days breakout, but just have to wait and see. Dow Jones is basically short term is a sell, medium term is neutral, long term is also neutral. FTSE 100 in UK, short term is a sell, medium is a buy, long term is neutral. Gold, yep, that's what I've been saying. It has been moved up last week or so, and from sell, last week from sell and this week to buy, because of last big drop in the Dow Jones on Wednesday and Friday. But I'm still expecting a lot more higher. But it did try to go like almost 1800, but it stayed back to 1750 at the moment. So we just have to wait and see what's happening. So short term for gold is a buy, medium term is neutral, long term is still a buy. Next is Hang Seng. Short term has changed to buy this week. From last week's sell to this week's buy, medium and long term is still neutral. So it's quite fluctuating in Hong Kong Hang Seng Index because of the security law, and obviously the Dow Jones sort of moving down, and see how it goes. Nasdaq is still a buy, short term, medium and long term across the board. So still great over there at the moment. But it's trying to break and stay above the 10,000 mark. It's been trying slowly, but it's not doing too well at the moment. It's gone back below the 10,000. We just have to see how it goes. Next is Nikkei in Japan. This one is still recovering well, still doing well. Short term, medium term, long term is still buy. Silver, short term is a sell, medium term is neutral, long term is a buy. So it's very much similar to gold, but short-term wise, gold seems to be moving, silver is not. So that's the difference. US dollar, next is US dollar against Chinese yuan. Short-term is a sell, medium-term is neutral, long-term is neutral. So basically, the Chinese yuan is weakening against US dollar. We'll see how it goes. Next is Japanese yen, USD against Japanese yen. Short term is a sell, medium term is neutral, long term is also a sell. So there is a slow case of just like last couple of weeks or so, people, for some reason, Japanese yen became more stronger against US dollar. That also gives a sign that US dollars is weakening a bit somewhat. If you look at separately on the US dollar index on its own, it's around 97.5, 97.8 and come back down again. So we just have to wait and see. It's trying to crop up to 98, 99 area, but the market seems to be not having it, and that's what we have to wait and see. So when the US dollar weakens, the Japanese yen will move up, and so is Australian dollar. So we just have to wait and see what happens in the US dollar in the coming weeks and months. Next is British pound against Japanese yen. Sell for short term, medium term is neutral, long term is a sell. British pound against US dollar, sell short term, medium term is neutral, long term is a sell. For British pounds, we don't really know what's going to happen. It's just gone sideways, gone below the 200-day moving average and 50-day moving average. That's why the long term signal is a sell. Short term wise, yes, it's below the 280 hours. That's why it's sell from the British pound. So a lot of uncertainty going on with the lockdown coming out when people are slowly coming back out from lockdown, starting to work. But just in America, people are not really social distancing properly, especially on the beaches. Brighton and Bournemouth and stuff. There's on newspaper and even BBC News as well. People just congregating, mass gathering by the beaches, just trying to have some fun by the sea. But then the social distancing all out of whack. So I don't know how that will play out in UK here. So maybe repeat similar to what happened to US as well. So just watch out. Bitcoin next is short term is a buy. Medium term is neutral, long term is still a buy. Again, Bitcoin is struggling, going up and down between the 9,000 to 10,000 mark. So just running up there, not doing much at the moment. Over the weekend, this weekend, they have gone down below the 9,000 mark, but they recover a bit now. So I don't trade the weekend. So we just have to wait and see what happens on the weekdays. But it's still struggling between this 9,000 to 10,000 mark. And this is another surprise. You have thought, gold and Bitcoin during bad market time, you should have gone up. But Bitcoin didn't show up. I mean, gold got up a bit, got up from I think it went down back to 1,700 or something the last couple of weeks, and then got back up to 70.50, 70.60, and even tried to break above the 1,800 marks for gold. But for Bitcoin wise, it's not even doing much. It's just hovering between 9,000 and 10,000. It's not doing much, and people always expect when the market tanks, Bitcoin should be as an alternative to stocks. It should go up, but all this argument about Bitcoin supposed to be safe haven and similar to gold and other things is just basically I think one of the main problem is there's a lot of ETF against it as well, and it's quite funny in a way. We look at when there's ETF to whatever underlying trade and stock, whatever it is, that seems to hold the market down for some reason. And gold was similar, and crude oil, and now Bitcoin as well. So maybe a coincidence, but it's just worthwhile to look at it, because I don't believe in coincidence myself. Last but not least is the iShare 20 TLT ETF, which basically track the bonds market, the 20 years plus market. For the last few days, the bond market has basically the yield have gone down. So basically, what I've said is that the market's going down. In the stock market, all the money go into the bond market, and so it's not surprising the long-dated 3, 5, 10 years, those bonds have gone yield have gone down a bit as people pounding in. So I just go and see how it goes. But at the moment, basically for this ETF and TLT ETF, short term is a buy, long term is a buy, medium term is neutral at the moment. So we just wait and see. So a couple of surprises over when I'm doing my review and stuff. Probably more when I speak. More will come up when I speak to my for the next podcast, and then it goes through all the things I've done. That I've done the last couple of weeks. And overall, I see basically is now it's end of June. I was expecting a lot more volatility and move downwards over the market. It didn't happen. So once again, whatever I think biases I might have, the market's going to think something differently. So that's why we have a system is better and follow that system better. Our human emotion, our human thinking, human biases, even with with PhD on fundamental analysis, the market might do its own thing collectively, not doing is reflecting or looking at the fundamentals, even those like grey rhinos staring at the economy, staring at our faces now with so many people out of work. The market seems to have shook everything off and gone back up. I mean, for Nasdaq, you have making new high. Okay, you might be struggling to keep above 10,000, but don't forget you have make new high. during a pandemic when 40 million people in America is out of work, and Nasdaq is continuing moving up. Why? I mean, the Dow Jones recovered quite a bit, so is S&P 500. I think still about 10% down from its peak back in mid-February, early February, that kind of stuff. So in a way, the recovery quite surprising so far. But what happens next month, when more company coming out with their latest report last 3 months and see how things are, and when people start coming out, getting back to work, what happened the next 3 to 6 months will be crucial. I personally feel there's a lot more volatility moving up and down. And early in the year, we see a lot of unexpected events happens. First, a rocket attack by U.S. to Iran, killing Iraq, killing Iranian general. And then we have the coronavirus, and then we have the lockdown. And then what else? I mean, the Lucas things is happening in the background. Nobody talks much about it. And the recovery is happening here, apparently on the share market, but it's actually people getting back into old jobs. Is people still traveling internationally? Is international students and visitors still moving around different countries? Now we still have the trade war. We've got more spat going on between, who is the original contributor to the virus. I personally believe is natural event, but if you think of it, conspiracy theory, people, let's say American is right, say it's from China. Well, where did China got this technology from? If you believe in conspiracy, you can go further. That probably some contribution from the Western world. To me, is in America. I mean, Pompeo actually came out about a month ago to say, yeah, we fund those kind of research around the world. Why? Why human beings have to look into viruses and combine viruses, and also why don't they do it in own place back in America? Why are they finding other places? When other places, like Philippines or China, and other, or maybe India or somewhere else, when we have much lower security standards for keeping virus in place, health and safety kind of thing. Why they go do it in China? That sort of thing. And the main thing is, America government is saying something. We've got John Bolton's book. On the surface, the Trump administration is against China, but behind the closed door is doing something. Some deal behind the scene, asking other. Trump is asking Xi is to help him to, buy more stuff, agricultural stuff, and help him to get re-elected kind of thing. I mean, again, conspiracy theory, you believe that book's or not, it's up to you. But, it's a lot of things on the surface. You might see things one way. Donald Trump may, yell out and blah, 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 blasting China. But behind the scene, he might be doing some deals to help him one way or another. So it's a lot of things going on. So basically just, you never know what's actually happening. So stick with your system. Stick with the end-day price, and the system will see you through. There will be volatilities, there will be some losses, but if you true to your system, stick with it. Over long term, you will make money. I mean, sometimes you may not make money in a couple of months or maybe even a year. You may have a couple of down years, but you have to look at 5 years, 3 years point of view. You definitely make money. I mean, the trend following system is free. It's out there. It's a lot of different variations and flavors, and if you basically stick with it, I'm sure if you take a long-term view, it definitely works and make money. But trend following is a long-term thing, so we just have to wait and see what the market does, and then how we capture those money. Remember, don't push the market. Don't try to predict. Trend following is a reactive. Basically, we wait for the market to show its hands, and then we do things very much similar to poker. You have a lot of psychology warfare going behind the scene, behind those glasses and poker faces, and then you basically bluff and huff and see what other player is working and doing, and then react that way, rather than predicting what other people have. Just watch what you have in your hands, and then follow your rules, and your rules will make you safe and help you to make you whole. So this is the end of my podcast for this week, and I speak to you sometime next week. Thanks for now, and see you next week. Bye.